Hi, everybody. Welcome back to our cyber insurance webinar series. I'm Lonnie Huffer, Senior Product Marketing Manager for Cyber Insurance with Trend Micro. And of course, the lovely James Ingram, Cyber Risk Engineer with Arch Insurance UK. So today we're going to be talking about cyber claim trends and industry trends within the insurance industry and how they affect you as the insured. So James, first question I'm going to ask you today is what are some of the emerging trends in the cyber insurance market, and how might they influence coverage options and premiums in the future for an insured?
That's a good question. It's a difficult one to answer because the answer is quite frustrating in a way. In the insurance industry in general, for cyber, we're going through what's called a soft market, which means that our premiums for insurance are going down quite dramatically. We've seen kind of 30% plus decreases in premiums in the last kind of year or so, maybe 2 years. At the same time, we're seeing the claims trends and severity and frequency of claims increasing quite dramatically over those 2 years. So while everything's getting worse, what insurers are getting premium-wise from insureds is decreasing. So some insurers are starting to struggle. From an insured's perspective, from your client's perspective, what this means is, firstly, their premiums are decreased, so they're probably sitting there thinking this is great news, which is good. That means also that insurance will be easier to obtain in general. So but in general, the insurance industry's minimum standards will decrease, so you won't have to hit those kind of really difficult standards that might have been set maybe a year or so ago.
So when you talk about difficult standards, can you give us a couple of examples of maybe what somebody might have experienced previously versus what you're seeing now?
It's very difficult to define specifically. So you could have, say, I don't know, pen testing might have been an easy one. Maybe a year ago, one insurer might have said, you absolutely must have had a pen test in the last 12 months. And now in a soft market, they might not even ask that question.
Okay.
And it's the reason why they do it is because they know that if they're still competing to get clients, they're still competing against other insureds. And if one insurer isn't asking those questions and offering a cheap premium, if they ask loads of questions, chances are they're not going to get selected as the insurer. It doesn't always work that into that kind of extent or that just binary nature, but that's the way it could happen. So in general, yeah, minimum standards might be decreased slightly, easier to get coverage, and actually the policy coverage might be improved. Before, there might be limitations on certain coverages within the policy, and now because everyone's competing, it's that kind of supply and demand kind of argument. The coverages in policies are getting wider and wider and wider to compete against each other. So it's a good time to be an insured and not a good time to be an insurer. However, I would say don't assume, if I was an insured, I wouldn't assume that that's going to stay forever. And I think the general consensus is because of the severity of what we're seeing and people are really starting to struggle with claims, that we'll see a flip towards a hard market, which means premiums will go up and those minimum standards will start creeping back in. And that means that if you've decided to sit on your laurels and not improve those standards, you then might struggle again. So it's always best just to keep improving and assume the worst almost. That's the one tip I'd give on that.
Okay.
I think the big one to highlight as well while we're talking on this is the Change Healthcare attack that we saw late last year. That was huge in the healthcare industry. The healthcare industry for cyber insurance isn't the greatest anyway. And the Change attack, I think, it's going to affect 3/4 of American citizens. Apparently, there's going to be, obviously the figures aren't released yet, but they're expected to be very, very widespread. And at the same time, most healthcare organisations are going to be impacted, and the impact of that to insurers isn't really known yet. We're starting to see notifications. The whole industry is starting to see notifications, but that has the potential of being huge. And if it is, that might instantly flip us into a hard market potentially,
Okay,
just
so
because of the severity of that one attack.
okay, so it can literally happen that quickly just based on one major, we'll say significant attack to a large entity like United Healthcare, correct?
Yeah, exactly. Like United Healthcare, whether it happens instantaneously, but that might be the switch. That might be the switch that just kind of turns the dial. And as insurers start pulling out or hardening their standards or making life more, things are becoming more difficult for them, that's when their standards will start increasing. And it's, we'll see something like that change it. Either way, we're probably seeing it shift that way anyway, but that might just move the dial that much quicker.
Right. So James, we've talked a little bit about, what's gone on with the United Healthcare thing. So in talking about that in greater detail, like what are your thoughts on what someone who sits at a CISO level or a CIO level or a CTO level, um, what should their response or their action be to looking at these types of events and thinking about how they may affect their organization?
I think a good risk manager or a good insurance manager, depending on what their title is or however they've structured their management, would have a good idea of this, especially the bigger entities. We see that a lot, that they really know the insurance industry, mainly because they've got to try and they're going to have to forecast what their insurance is going to be the following year to try and get board approval. And if they're seeing that the cyber insurance is probably the rate's going to go up through the roof, that they'll be talking to their broker as well and saying, well, what's your thinking? And we've had insureds telling us this year that they've plumped for a massive discount because they know next year is going to go through the roof. So they should be aware of these things, but not everyone, but
Okay.
kind of anyone with that kind of role.
All right. So let's launch into my next question. So from your perspective, what have been the most common types of cyber incidents recently that have either increased cyber claims um, or other events that you may have seen over time that are maybe making a resurgence, and how have they evolved over time?
Again, good question. It's one of those questions that if you read every report that comes out from different vendors, there'll be slightly different trends and everything highlighting what they're seeing. So I'll come at it from what we're seeing at my organization and in the insurance industry in general. The obvious one is ransomware, and ransomware in general, certainly severe ransomware that actually manages to cause significant disruption, is on the rise. And how they're accessing it, there's lots of different attack vectors they're using, but once they get a foothold, what we're seeing is the amounts of depth they're able to penetrate into an enterprise, and then the quantity of devices and the spread they're able to achieve is quite significant in general. So we're very rarely seeing a very small isolated part of a network being ransomed. These attackers tend to be quite I'm trying to think of the best word, successful in their exploits, which is again something that's probably not new. It's still a threat that's out there. I think once people get bored with an idea, they stop realizing, stop thinking about it as a threat and so much, but it really is still there. I think legitimate credentials is one of the obvious ones to highlight. MFA, realistically, and this is my personal opinion, but it should be the opinion of most, is that MFA should be on any exposed account now, anything at all, especially if you're exposing it externally for remote access or anything like that. You should have the MFA enabled on it. But what we're seeing is that there will be some accounts that maybe aren't managed centrally, but are still network linked. So there'll be something that's causing a set of credentials to be exposed and be used that don't have an MFA challenge at some point. And it's still scarily common, even in the biggest entities. And even you talk to their CISO, they would say, I've got MFA on everything. And then suddenly they realize, actually, this very small department or clinic or whatever it might be didn't have MFA, and then that's the door into the entire enterprise. So I suppose the two takeaways of that is MFA for everything, and asset inventory of all externally exposed assets and credentials. Really understand your kind of your objects and your AD environment.
I think that's great. And I guess one of the questions that I have for you in relation to that is, how does an organization get a full list of asset inventory? From my understanding is that sometimes it's really hard to really understand all of that. So, as an insurance carrier, and specifically somebody who sits on the risk side of all of that, what and this may lend to another conversation in another day, but what are what um what are some of the, I guess, assessments that you guys might run, or that you may ask an insured to run, to kind of test against their environment, or understand what their asset inventory looks like? And this is in case people who are watching this and listening to this may not have incorporated any of these into their, quarterly, biannual, or yearly testing to really understand everything that's within their environment asset wise.
There are lots of different ways to kind of inventory your assets, starting with literally a manual process. So anything that goes out the door, comes in through procurement, gets put into the old school Excel format and gets recorded there. And I'm still a big proponent of that. But at the same time, there are some brilliant asset discovery tools that are out there that kind of monitor traffic on the network, look for newly attached MAC addresses, and look for unknown traffic from devices. Whatever it might be, I think what there happens to be is maybe like an over reliance on one option, when there should be a kind of a layered approach where an asset inventory should have multiple feeds. And if they all end up equaling the same thing, then you've succeeded. But if they all equal slightly different things, then one of those asset management options is obviously missing something, which is good, because then you're discovering it elsewhere. At the same time, is really understanding your business infrastructure as well. That's one thing we see insureds struggle with, especially either the biggest insureds or insureds with multi-departments, or maybe holding companies with multiple entities under them, is that they really struggle to grasp every aspect of that business. And there's always going to be some kind of rogue department that they don't really have a grasp of, kind of procuring their own systems, network attached in a way that they haven't quite understood. That's where the kind of the creep comes in, and the shadow IT starts to appear, and that's where they need to kind of be monitoring. So I think always assume that you don't have a full asset inventory. It's amazing. You talk to some CISOs who are really, really on it, and they will refuse to say the words 100% asset inventory. Refuse. They'll say it's greater than 99%, but you never know. And that's a really good mental way to go about it.
How do you as an insurer then view a statement like that? Like, I 100% agree with what you've just said, because I think it's impossible for any organization to understand 100% of their inventory asset. If they can get as close to 100 as possible, I think that's outstanding. But what are the expectations from an insurance carrier on that? Is there a range that you guys look at? Is it is it as long as it's above 90%, we're good? But then I feel like that's an arbitrary number, right? Because 90%, because you don't know what you don't know until you know. So what is that magic number then?
It's that will change with every insurance carrier. And as I say, we're in a soft market, so that number has probably come down. And before, that would have been high 90s is what would have been requested.
Okay.
Whereas now, I'd say 90% is like the magic, as you say, figure, the figure that everyone kind of just goes, well, fine, all right, I'll move on. But one of my frustrations is I think the insurance should be trying to drive excellence and drive improvement in an industry, because people want to achieve that. And I think by lowering our standards, then that allows for creep to that is asset inventory to lower. It's not just asset inventory, that comes across all of our controls. But if I was a CISO, I would try not to settle for 90, and I would always be trying to improve. But it's not my role.
Okay, so one of the things that I want to add to the audience, as James and I were talking about this, is if you guys are familiar with Trend Vision 1, you know that we've just added our inline network NDR stuff. And so that could be part of the equation that James is talking about for all of you, and just layering things on top of one another to really get a better look at your entire asset inventory. So if it's something that you have added into your portfolio, or if it's something that you're looking at, definitely take into consideration kind of what we've talked about today, and really looking at adding NDR to your portfolio of products when it comes to assessing and identifying what your asset inventory looks like, and really what you've got that network telemetry coming in. So you already are seeing bad traffic before it can get to your endpoint and affect your devices. So I just wanted to make that quick little note for everybody, and we will dive into our next question here with James. So next question. Can you highlight any emerging cyber threats or attack vectors that businesses should be particularly vigilant about in the current landscape? So I know you said we're in a soft market, but you guys are seeing an uptick in claims and in ransomware. So with that said, are there new attack vectors that are becoming more prevalent in the claims that are coming in, or what's what in this area for you guys?
I'd say in general, I think a bold statement which a lot of people are shaking their heads at, the methods people are using to attack different enterprises in our networks and the threats we're seeing are generally similar to what we've seen for the last 5 years, but they're just evolving, and they're evolving. I think the cybersecurity industry is almost always chasing the threat. We're never ahead of it. We're always trying to improve behind where the threat is, and that threat's always improving. And I think the attackers are just getting better at doing what they used to do. I think a good example is phishing. I think phishing. Some statistician are probably throwing things at me through the screen, but I think phishing is still the number one initial attack vector for most incidents.
And I can attest to that with the number of phishing emails that I've gotten in the last week alone. And I think it's a direct result of one of the, I think I got a Comcast and an AT&T notice in the same week, and I've definitely seen the amount of what I'll relate to as spam emails come into my account, but a lot of them are looking more and more legitimate, to the point where I can't look at them on my phone anymore. I have to go into my computer on my email, hover over the two, double check the email address, and even go so far as to Google the phone numbers that are being listed in those emails for support, because they've gotten that good. And in some cases, even those phone numbers are replicated as call centers for those particular agencies, and they answer it that way. So I know what you're talking about, and it's nice to know that it hasn't changed, but not because it's just gotten that much. But are there, and this is going to come up in another question, but are there other attack vectors out there that maybe traditionally haven't been as targeted as you guys have now seen with some of the claims that have been coming in? So, I know phishing is still a big one, social engineering. But is there another maybe lesser known attack vector that has started to pop up recently that maybe hasn't been in the spotlight as much?
There's a few I'd highlight. One of them kind of circles back to social engineering, but it's MFA bypass using social engineering on help desks, and we've seen multiple claims because of that, and they're quite successful. But when you think about the logistics of it, you're phoning a help desk to say, I'm so and so, you need to reset my MFA. You'd think, I'm probably quite right, that help desk will go, you're not that person, go away. But again, I think these attackers are getting so good at this, that they're able to bypass, they're able to convince the person at the help desk to reset their MFA. And we've seen some huge attacks last year because of this, and we've seen multiple other ones. So one of the things we're looking for is what methods have they put in place, our insurers have put in place to prevent this from happening. And it's things like getting secondary authentication, having to be on site to get your MFA reset so you can't do it remotely, just whatever you can do to make it that someone, even legitimately, if a legitimate person is trying to reset their MFA, it should be really tough for them to do it. I know we're trying to make the user experience better, especially in kind of IT and cyber, but this is one thing we don't want to make it better. We want to make it miserable for them, if we can. But the help desk people out there are going to hate me for saying that. So another one we're seeing is the low-hanging fruit attacks, and that they really have shot up in the last few years, and probably culminated in the Move It attacks last year, in that some attackers have pivoted away from trying to do the traditional get a hook into an endpoint or something externally exposed and then try and traverse through the network. They're just looking for whatever they can grab and go with. So with those, what they're looking for normally is kind of exposed data stores as close to the network perimeter as possible, so they're not having to do that lateral movement, that traversing into the network. They can sit there for ages, because the less traversing they have to do, the less sensors there are, the less things that are going to catch them out, so they can sit there and hover and try and scrape as much data as they can before disappearing. And again, because they're not being discovered, they can do this to thousands of different insureds before anyone gets discovered, in which case it's like a bit like the Move It attacks. They were on people's networks for months and months on end, on hundreds of different networks, to the point where they got so much data they didn't know what to do with it. They couldn't even manage it properly. And we are seeing a lot more attacks like that. Cloppers are experts in it, but there are others who are starting to do the same thing. So one thing I would say is have a really good understanding of your close to externally stored data stores, and how are you managing that? How are you minimizing that data? FTP servers and things like that should never really have that much data in them anyway. They should only have the data you are sending, and then they should be cleansed. And they're just things like that need to be considered. It's very easy, and we all do it, just to think about it. I'll deal with that at the end of the year, or I'll have something in my policy documents say I clean at the end of the year. So that's another one. And I think there was one other one I wanted to say, which was of third-party risk. That was the other big one.
Big one, yeah.
It's a big one, and that as we become more cloud reliant, everything's done on a kind of like SaaS style environment and applications, where we're using them as services in the cloud rather than everything on-prem. So we've got a lot more reliance on third parties, especially managing and dealing with our data and brokering our data. The downside of that is you might have all the best controls in the world, but how do you know that third party does? There are ways you can know, but just make sure you're putting those efforts into place. Change Healthcare is the perfect example. We've already mentioned it. One third party has affected 90% of all healthcare entities in the US. That just shows how these aggregation issues into one third party can cause you an issue. So just having a really good third party management program in place is a really good idea.
So let's talk about that for a second, because for me, I don't have a lot of insight into that. So I'm looking at it from the perspective of if I'm a company and I have a third party provider, or I use somebody like AWS, or I use Azure AD, or some other cloud-based provider. Is it something that I'm going to have in my contract with them that says, as a third party provider, we expect you to have these protocols or these security practices in place before we agree to do business with you? Because I want to say I've seen a lot of articles, or I'm talking with other carriers and brokers out there, that there have been points where they're like, oh, I need to amend my policy because I have to have this in place to meet the standards for this other party that I'm doing business with. Is that kind of what you guys are seeing in the types of policies that you're procuring for your insureds, or either, I don't know if you call them amendments, or the word is right on the tip of my tongue, or clause or something like that to someone's policy in order to facilitate some of this stuff for third-party risk. I know it's a hot topic with our customers as well, and how do we tackle this better? What do we need to do to I guess fortify ourselves against it? It's like, what can you really do from that perspective, because you are reliant on another entity? So, I mean, do you have any maybe best business practices, just off the top of your head, that maybe, as a CISO or a CIO, CTO, CFO, whoever you are, that's kind of doing this, and you're intertwined with getting your insurance policy for your organization, but also have a hand in identifying the security protocols your organization is using? Are there things right off the top of your head that you could maybe speak to, that the audience should consider, or think about if they haven't at this point?
I think you spoke to a couple of them. Absolutely. So it really depends on what it is they're doing with the third parties. If it is kind of like a major hosting environment like Azure and AWS, in which case I would say get third party audits, get software platforms, make sure you're using your endpoint protection, cloud modules, those kind of things, to make sure that your configuration management is done properly. That's because you're kind of master your own destiny with those kind of hosting environments. Whereas if you're relying on a third party and you're relying on their systems in a kind of say it's a HR system or something like that, I'm desperately trying not to name any companies or anything when doing this. Firstly, ask to see any testing they've had, any standards they've met and compliant to. Some people even request pen test reports to say that they're clear. That doesn't have to be detailed, but it's just, yeah, we've had a pen test by a recognized third party and there is nothing to report, or nothing extreme. They should be able to answer a questionnaire. So you might want to have a questionnaire with your minimum security standards, and then give them that and say, do your minimum security standards meet this?
Okay.
I think when you're going for one of the biggies, they're so used to this now, the chance of you finding anything that you're going to pick up on is going to be slim. Whereas, or a client or an insured is going to pick up on. Whereas if you're going with, like, say, newer third parties, or third parties that are a bit more bespoke to what you're doing and on a smaller side, essentially, I think diving in as much as you can is well worth it. And continuously looking at that. Just because they were good in January, it can't hurt 6 months later to say, do you still apply to this? Keep an eye out for them. Keep an eye out for them in the news. Just, I don't sound silly, but just if they're going through lots of acquisitions or something at the moment,
That's fair.
those kind of things would be alarm bells ringing in my head that maybe I should need to re-audit them and rethink about this. And lastly, there are lots of third-party risk management tools out there now. Some of them are better than others. I'm not going to name any names, but it allows you to monitor and scan those third parties from an external perspective. There are severe limitations to them. I'm not going to say they're the end of the be all and end all, but as a minimum, at least you can get an idea of their posture from an external perspective with these scans. And if you see anything suddenly like fall off a cliff, or you see any massive gaping issues, at least then you'll be able to address them and say, you need to solve this quickly. So
Okay.
yeah, one of those.
Perfect. So I know we've kind of talked about this over the last few questions, about kind of where the cyber market is now. We're in a soft market, so premiums are relatively low, but based on the severity of claims that you guys are seeing right now, that trend could tend to flip and become a little bit more hard and a little bit more difficult to get cyber again, with a lot more controls in place. And so, I had this question around, cost and frequency of cyber claims in response to evolving cyber threats and regulatory environments. And we haven't really talked about regulatory environments a lot yet, and I don't know how much bearing that has on insurance rates. And you could just tell me yes or no, it doesn't. Because
It does.
it does. Okay, so maybe we should talk about that for a hot second. And I know here in the States, the SEC 106 rule is pretty big with, how organizations are, disclosing, how they're assessing and identifying and mitigating risk and kind of who that person is that's responsible for it and how the boards are being notified. But I guess from a regulatory perspective, what are some of the major regulatory things that you're seeing that kind of impact this whole cyber insurance side of the equation and affects, how you guys, write policies or how it affects premiums from that perspective?
From an overall standard, we care probably less about specific regulations and more about how the uptake on them and how easy they are for insureds to adapt to and change to, and the likelihood of there being a gap between the regulations being enforced and then them meeting them, because that gap is where we're kind of liable, and that's where we'll start to have an issue. So we all tend to react more to when we start seeing fines and issues rather than the regulation itself, because we don't know the in-depth. Like, there are people in the insurance industry who do, but certainly I don't and my team don't, in terms of how there are so many regulations out there that are very industry specific. To monitor every single one would be a full-time job. So we only really monitor the ones where people are really struggling with, and the ones that are going to have the biggest sweeping changes that are going to be required by an industry. That might be kind of like PCI DSS 4.0 that's coming out. We know that's going to be hard. We know it's going to be difficult for a lot of industries to meet. So another thing we've seen, which is scary to me, is the number of data breach class actions filed in the US. Now, you can probably tell I'm British, so US law is I'm not one to speak about it because I don't really I'm not really involved in it. But there have been more data breach class actions filed in the last year in 2023 than the previous 10 years combined. I think that is a stat. Don't quote me on it, but if it's not exact, that's roughly about right.
Holy cow.
The kind of, so the curve is like this. 2022 was high, and in 2023 I think doubled it. And it's, I think, again, I'm not one to comment on litigation practices in the US, but you've got entire law firms now who are looking for these issues, and so making sure that you have a good understanding of how you're using, controlling, managing your data is really important. And if you get a massive breach and it's a ransomware attack and they steal your data, this is still going to happen, right? We have seen there is a connection between negligence and use of the data for wrongful purposes and the eventual cost of that, the settlement costs. So in general, if you've used the data in a wrong way or you haven't protected it in an appropriate way, the class actions do seem to settle slightly higher, well, reasonably higher. Whereas if it is a ransomware attack and you've done best efforts to stop it and they've just managed to get through, you're still going to have not a great sum of money to have to pay out, but it's still not going to be quite as severe. But at the end of the day, the people, the individual clients, customers aren't seeing any of this money, but they might see, $50, $100 come through as a check 3-4 years later. But these lawyers are doing very, very well out of it.
Right. So what I'm hearing is I should have become a data privacy lawyer. That's what I'm hearing from you.
I've got my books here. I'm retraining.
Okay. So that's really insightful to know, and that's terrifying at the same time to understand that it's jumped that much. But at the same time, I also feel like I've gotten a lot more notices in the last 6 months than I think I ever have about data breaches. And in fact, I think I saw one last night on LinkedIn that it was a one of those companies that like basically does background checks. I
Yeah.
saw something to the effect that one of them got breached, and it is exposing like 2.9 billion people's data. Now, I'm sure we could have a whole conversation about just that, but this when I read this yesterday, it was like, it has the streets you grew up on, your mother's maiden name, like all the questions that you get asked to verify your identity, right? So now what are you gonna do? So maybe we should table that for another day. And
Which is going to end up scaring people.
yeah. So if you're not scared by now, you should be. Uh, let's talk about attack surface risk management.
Okay.
I don't, we at Trend like to call it ASRM. I've also seen it in the market as just, attack surface management. We like to throw the risk in there because we feel like we're doing it better. Um, so so talking about that, I'm just really curious what someone like you from the insurance side of the equation thinks about ASRM. What you think of of that vector overall, how the data that resides within attack surface management, what can you see? What would you like to see? Um, what what is the value of it to the insured, or how would you use information like that to evaluate an insured? Um, and then maybe we can talk about how you see organizations who have visibility into something like this and how it impacts their insurability.
Okay, so I think there are two elements to this, and it's really interesting the differentiation between them. Like you've got the attack surface risk management that the insured will be doing themselves on themselves, and I think that is absolutely vital. I think everyone should be doing that. They should have. It comes back to the asset management thing a little bit, in that they should have a good understanding of what they have, but then on top of that, it's configuration management and then knowing what's exposed, and they're making sure that that attack surface, especially externally exposed devices, they know, they have a good understanding of everything that's out there and what their exposure is to it. Because the second something is a new vulnerability released or 0-day comes out, at least having an idea of what your exposure is will allow you to manage that as quickly and as efficiently as possible. And it always scares me how quickly the attackers can weaponize a vulnerability, in that it gets released and then within a few days they are throwing it, and people are getting hit by it. So to be able to deal with it efficiently is really, really important. And if you don't know what's there and you're not managing it, you won't be able to do it efficiently. So on the other side, what insurers are almost using kind of third-party risk management tools I spoke about earlier,
Okay.
to do almost the same thing, but from an external perspective. So we're kind of doing our own external risk management, attack surface risk management on our insureds, and most insurers are doing this now, but they are limited in that the attribution is the hard thing. So these tools are attributing IP addresses they're seeing and associating them with the insured network. But you get two different platforms up, and the number of IP addresses and the IP addresses will be sometimes wildly different, sometimes subtly different. I've never seen them the same ever. So
Okay.
it shows there are going to be things we're missing, which at least the insured will see. So for me personally, when I'm evaluating an insured, I will run my scans and I'll be looking their attack surface, and if I see anything glaring, I will highlight it 100%. But at the same time, I get more comfort knowing if the insured says, I have an attack surface risk management tool and I am managing this properly and I'm doing X, Y, Z and I have this process in place, even if my scans are absolutely screaming at me, I would trust them more than I would trust my own scans. I think because that attribution factor, half the time when I dig into those IP addresses that are screaming saying that this is a big problem, once you kind of delve down at DNS records and everything else, you work out that they aren't associated with that insured in the first place. But when you're looking at 10,000 IP addresses and you've got me sitting there tapping away at them, it takes time to go through them. So yeah, attack surface risk management is very, very important. I can't stress it enough. But I think for the insured side.
Okay, so I just want to recap all that really quick. So insurers are running an external third-party risk assessment tool, and so, for example, you may have a list of vulnerabilities that you've identified that if someone has them in their environment, they need to do something about them before you'll underwrite a policy for them effectively. Is that correct? Or something to that degree?
Yes, something to that degree. We will need to have confirmation that that isn't actually a risk, or the risk is being mitigated in some way.
Okay. And then the second part of this is, as we talk about ASRM, and for those of you listening to this webinar, you know we've got the ASRM module with Trend Vision 1. I'm sure there are a lot of reports available within that module that you can share with your insurance carrier or your broker to show what is inside the firewall. And I know that term might be a little scary, but you heard James says they would far more trust something like that than the external scans that they're running. And so for those of you listening to this, if you have that module, please utilize it to your advantage. You know, it's, you know, I'm sure you can show what your mean time to patch is, the top vulnerabilities within your environment, the unmanaged devices that you may or may not have, where multi-factor authentication is at its weakest. Those are all things that you can address openly with your carrier or your broker and identify upfront to understand what you'll need to address in order to move forward with getting your policy or just strengthening your network overall. So please take advantage of it, and don't be afraid to share that information with your carrier or broker, because it's there to help you, and they're there to work with you and to provide you the best policy that they can based on the security tools and configurations that you have in your environment. Okay, so now that I'm off my soapbox on that, I think I've got 2 more questions left for you, and I'm pretty sure they probably go hand in hand. So the first question is, what are some of the key factors that contribute to the severity and impact of cyber incidents on businesses? And how do these factors influence insurance claims? And I think that may be tied to also like what are some of the best ways to expedite recovery efforts when that happens, right? So, you know, somebody got breached, right? And we don't say it's breached until the lawyer says it's breached, right? Up until then, it's just a security incident. But there are definitely things that affect the severity and the impact of it. And I think on our previous call, we talked about, you know, the need of having those business continuity plans in place, or having a disaster recovery plan in place, and having an IR plan in place. I feel like there's a lot of acronyms and all of that I could have just rattled out. Even saying them out loud was a mouthful. But from your perspective as an insurance carrier, what are your thoughts on those particular pieces and key factors, and what, you know, I think this maybe lends back to best practices overall, but you know, you're the expert, you've seen a lot of claims come through, you help underwrite things, like what are those things to you that we can share with our audience today so we can better prepare them?
Absolutely. So I'll start off with kind of the severity side and the impact. Firstly, it's a when, kind of not if, measures. It will happen. Everyone is going to have an incident of some kind at some point, probably more often than what they like to believe they will as well. So the first thing is, when that incident happens, is limiting the spread, limiting the severity of that impact before we've even gone into kind of our responses or anything else. Is that attacker's in, nobody's aware that attacker's in. How do we limit that attacker from being able to take down the entire network or be able to get access to information that is most critical to us, or systems that are most critical to us? So limiting the spread of the attack, and that could be measures like segmenting your network to a high degree, segmenting or isolating critical infrastructure or critical data. The next one, one of the, it's very on topic for this call, but it's early detection, is having as many sensors deployed as you possibly can in as much of your environment as you possibly can. The more sensors you have, the more chances one of them is going to fire. Preferably, you want multiple of them firing, because then when all that aggregates, the alert in your SOC or whoever's monitoring your systems is going to be going crazy, and that's going to mean that your reaction is going to be that much quicker.
So let's talk about that for one hot second. So sensors, are you talking just endpoint sensors, or are you talking email, cloud, network? What are you talking about? It could be
everything. I mean that it sounds such like an easy answer, but it is everything. If the more sensors you have deployed across your network, especially if they are integrated and communicate with each other, whether that's through some sort of like kind of aggregated platform, whether that's through your SIEM tool, wherever it might be, it's trying to get as many devices talking to you about what's going on as possible, and then setting up as many traps and alerts as you can throughout your network. That is going to be the quickest way to fire. And very rarely does an attacker use one, get in and then use one method to reverse the network completely. They might be using an email to get someone else's credentials, followed by then using that credentials to use, I don't know, RDP to move to a different part of the network, and whatever it might be. You're going to need multiple sensors, as you say, in email, in the network, on endpoints, all of them talking together. So yeah, very, very important. Limiting the attacker's ability to move laterally as well is things like if you don't have to use RDP, don't. If you are using RDP, use MFA, or only allow it through a PAM tool, or whatever you can so it's not just a case of kind of whipping up RDP and cracking on. And same with things like PowerShell. Whatever you can to try and limit the common tools that attackers will use, so living off the LAN tools, essentially. Whatever, they don't have to put exploits down, they can live off the LAN, and great, they're going to be able to move laterally so much easier, and less chance of being discovered because they're using legitimate tools. And then so it comes back to the endpoint sensors, but credentials. If privileged credentials are your keys to the kingdom, so limiting the number of privileged credentials, limiting the access to privileged credentials, rotating them as often as you possibly can. So if an attacker gets in and starts scraping the environment, they're not going to be able to find them. If you can keep privileged credentials protected, or at least tiered to the fact that it's role-based, so if they manage to get hold of one, they're not going to have the keys to your domain controllers or something. That will massively limit the spread. Once they've got your domain controllers, you're, one of the better phrase, you're done for. So then, at the point you're being done for, you're now rolling into the next point, which I know I've waffled too much on that one, I'm sorry. But the next point is your response and recovery phase. And it's exactly like you said, it's having the plans in place. And I think one trend we've seen is most people have plans in place. Most people have a documented plan to respond to an incident. And then they lock it in a cupboard and go, yeah, that's done. And they forget about it, wash their hands of it, exactly. And that they might as well not have the document, because if I'm being really honest, they might as well, because nothing ever goes the way you think it's going to go, and as soon as it actually happens, anyone who's listening to this who's been in that environment knows how stressful it is and how nothing goes right. And there's, especially the first kind of 24 hours, there's so much of a flap that goes on and everyone's panicking. Having a plan that everyone knows, everyone's au fait with, and everyone can just get down to their role that's defined in the plan, it makes things so much smoother and more efficient. So I think if there's one thing out of all this waffling I've been doing is practice that plan, and not just practice it for the sake of practicing it. Really question it, sit around a table and tear it to pieces, be really brutal with it. And you should even have things in the plan like, you should go down to the level of detail. Who goes and gets the food? All your engineers are sitting there, they've just worked 36 hours without sleep. They are dying in their chair. Who is feeding them? Who is making sure of their welfare?
That's great advice. I know for sure that's something that I wouldn't even have been on my radar, but it's small details like that I think, help make a difference. And as you're saying all of this, all I hear glaring in my ear is engage your breach coach. If you live in the US, they'll walk you through these incident plans and they'll test them with you. And so I just want to highlight that really quick for everybody listening to this. We've got several breach coach partners that if you haven't tested that bad boy in a while, engage with one of them. That's what they're there for. They will tear it to pieces. They will put your team through the ringer. They will help you figure out where you need to strengthen it and what you need to add. My other question to you is, as a carrier though, do you guys set a requirement around showing that it's been tested, or how often you test it? Because I kind of feel like it should be there, but you shook your head a little bit, so that kind of says to me that you don't. You just take their word for it that they have it, but then when that claim comes through, it's like, everybody's just running around with their chicken with their head cut off, and you're like, but you said you had a plan. So I just, I kind of find it a little bit at odds that, you're like, this is what they should do, but this is what they should be doing. This is what will help them prepare better. But then on your side of the equation, there's no requirement, per se, for it. However, you recognize it and you see it as a vital part of expediting recovery efforts. So what advice, and you may tell me, Lonnie, strike this question when we're done, but between an incident response plan, a DRP plan, disaster recovery plan, or a BCP, business continuity plan, which one is more important in your eyes?
And you've absolutely thrown me under the bus with that question. They are all important. There you go. The risk manager can look away. They are generally all as important as each other, and we probably care less about disaster recovery depending on where the definitions of these vary. What should be in what, and different industries say what should be in each is slightly differing. However, in general, the IR plan, the cyber IR incident response plan, deals with the majority of what we're looking for. Okay. And then that should then be folded into their business continuity plan and yada yada yada. So they should all feed into each other, but their IR plan should be the one that we probably focus on the most.
Okay.
And to mention what you said about, do we require them to show it and things like that? No. And I understand why. We personally at Arch, we ask quite a few questions on their incident response plan, and we go into quite a lot of detail. Others might not, but I would say is this kind of back to my frustration of a soft to hard market. When it starts to harden up again, you will start getting more questions on it. So you're better off to be prepared now than enjoy the easy time now. On that note as well, one of the ways we can evidence that an insured is doing at least we can see they're doing some testing on it. First, we ask them, do you do testing on it? But then we look for maybe third-party tabletops or any sort of workshops they're doing. And then we might ask who they have involved and who are the teams involved in those workshops. Because at least then we'll be able to see how seriously they're taking it, rather than it being one person pulling it out of a cupboard and having to flick through, yet still there, and throwing it back. And on all that as well, you mentioned the incident response managers. I'd echo that completely. They are all the ones we work with are brilliant. They're very good, and they will help you. And if you have an insurance policy as well, chances are you'll have one identified, so you use them. That said, as well, if you do have an incident response manager that's been assigned to you in your policy, make contact with them. That should be part of your incident response plan, is already having predefined contact, even if it is a half an hour call to say, hi, I'm X company, and I have a policy with, I just want to say, these are my details, this is everything. And if you have preferred incident response vendors, or you have partners that you work with who are going to help you in an incident response, let them know that, because then when it all goes bang, everyone knows the level playing field, everyone knows what's going on. The incident response manager can get instantly to work with helping you, rather than have to ask all these questions when the building's on fire around you. So not literally, hopefully. So yeah, as much of this you can have in place prior to an incident, have in place, I think would be one of my takeaways.
So what I hear is communication is key from that perspective. So again, I want to wrap up a few things, and hopefully I can remember everything we talked about today, but we'll start with the market is soft right now, but there has been an increase in claims and severity. And so expect the market to turn hard again, probably sooner rather than later. What does that mean? Your premiums will go back up. There'll be more controls in place, more requirements, yada, yada, yada. From a severity and what you can do perspective, have your plans in place. Know what your teams are doing. Practice those incident response plans. Engage the help of a breach coach or a lawyer that specializes in data privacy and cybersecurity law. They will help you work through that so your team isn't inundated or wants to jump off a ledge when something does happen. And I say when, not if, because it will be a win, as James has already said. And James, what else am I missing? I know we covered a lot of stuff today. AFRM is your friend. It's also your insurance and your broker's friend. So please share away. And then am I missing anything else that stood out to you during our conversation today that you would like to leave our audience with?
I think the rest is mainly just focusing on those upcoming, those kind of improving threats. Don't sit on your laurels. Your controls and your security needs to improve alongside the threats that people call it emerging threats. It's not necessarily emerging. It's, think of it as improving threats or evolving threats. And so your systems have to evolve with them, I think, is probably my takeaway of that side of things.
Okay, perfect. Well, James, thank you so much for your time again today. I appreciate it. I know our audience appreciates it. And we will be back again to talk about, I think, our next subject, which is going to be pre-breach services. So I'm looking forward to that. And with that, I will say goodbye to everyone, and we'll see you guys soon.